I'm Steve Spencer from SMB Capital. In today's video, we're going to review a blog post I recently wrote about the process of stock selection and game planning before the market opens. So if you're interested in finding out about the best risk-reward setups and how we identify the key prices where to enter and exit trades, stick around. So the first thing that we do when we get to the office in the morning and sit down in front of our trading station is we begin to prepare our trading list for the day. What I do is I go through what we call the SMB scanner, which identifies stocks with news and trading activity in the pre-market to find stocks with strong catalysts. So that's the number one thing. I need to find a stock with a strong catalyst, and that can be an FDA announcement, that can be unexpectedly good earnings, and things of that nature. And again, all these things are covered in detail in the blog post, but I wanted to walk you through a real-life live example from today and how I apply this technique. The number two thing on my checklist, after I find out if there's a strong catalyst, is identify if there's sufficient liquidity. Now, this will depend to a certain extent on the experience of a trader, but generally a good rule of thumb is a stock that normally trades more than 1 million shares a day, if it has a strong catalyst, is going to be very liquid. It will trade several million shares for the day when it has a catalyst, and will be easy to get in and out, even of a very large position, which could be anywhere in the tens of thousands of shares for a more experienced trader, or for a newer trader, a few hundred shares. And so once I go through those first two steps, strong catalyst, sufficient liquidity, I will move on to actually game planning for that stock. How do I think that stock potentially can trade when the market opens, and understanding based on how it trades off of particular support and resistance areas, these things will inform my bias in the particular stock. So numbers 3 and 4, after we identify catalyst and identify sufficient liquidity, are examine how investors and traders are positioned over several time frames. And then number 4 is estimate where the stock will trade when the market opens. Estimating where the stock will trade when the market opens, you're going to need the stock after the catalyst comes out to be trading in the after hours or the pre-market, so we can see volume to judge how people are trying to position themselves. So in the blog post, KMX was the example. You can check that out if you're interested. Today, I want to take a real life example from our morning game plan, which was Tesla. So the news in Tesla was they missed first quarter delivery numbers, and they missed that number by a lot. And so we knew this was going to be very in play. And the stock already in the pre-market was trading hundreds of thousands of shares at much lower prices where it closed the prior day. It closed above 290 the prior day, and when I started looking at it at 7 o'clock this morning, it was already trading in the 260s. And as we got closer to the open into our morning meeting, it actually traded all the way down to around 260, 261. And so that's what allowed me to develop our potential resistance levels from when the market opened based on where people were selling in the pre-market. And in order to develop the support levels, what I did was I looked at the higher time frame, the longer time frame. So let's take a look at, here's our morning game plan notes. And you can see that we've actually filled in the potential support and resistance levels. The support levels were 250 for support 3, 256 for support 2, 260 for the first support. And we'll look at the longer term charts to show you. I'm going to show you exactly how I identified those. And then the resistance levels were based on the pre-market price action and where people were positioned coming in. Remember at the top, when we talked about kind of identifying a likely trading pattern when the market opens, we want to see how investors and traders are positioned coming in. So what I'm going to show you is what happened the week before they released these delivery numbers, and what we can see is, right here in the 30-minute chart, coming in the 6-7 days ahead of the release, was the stock had just bounced from 256 up to 295 in the 7 trading days before the release of the numbers. So we know that almost everybody who bought this stock in the last week or so was long basically from prices higher than where it was gapping down to in the pre-market today. So those people are going to be motivated to sell into any bounces up into 270. And generally, people who are positioning themselves in front of an event, they're making a bet on what's going to happen in that event. In this case, they were wrong. People basically, other than the people who bought from 256 into like the mid 260s in the first couple of days into the bounce, everybody is out of the money. They're potentially going to be a seller, and that's going to create downward pressure, and that's why it's gapping down into the 260s on the bad news. And the news was bad. At the same time, anybody who bought at the lows 7 trading days ago at 256 into the low 260s, they're not really nervous. The stock's gapping down to between 260 and 265. Those people who are buying down there into the 250s, their stops are probably below 250. Because that's longer term support. So we know that if the stock bounces up to 270 or the low 270s, there's a ton of people who are going to be motivated to sell because people are motivated to sell when they're back to break even or back to a small loss. And at the same time, we know that potentially people are going to be buying into our support levels based on the higher time frame. So let's take a look at the higher time frame chart. Here's a daily chart. And what we can see is over the last year or so, the stock was bought at 250 several times. On the left of the chart, it was bought at 250. In the middle of the chart, it was bought at 250. Most recently, the most recent low from a couple of weeks ago was 256. So we know this thing in the pre-market is trading in the low 260s. If it really gets hammered and takes out the low from 2 weeks ago, 256, the next natural support level is going to be 250. So that's how we got R2 and R3. R2, the low from 7 trading days ago, 256. The low from the last year, major support from the last year, 250, that's R2, R3. R1, we got from the pre-market, the pre-market trading action, which is right here. And so if we zoom in, we can see the pre-market trading action, and I've labeled R1 for you right there. That's where there was some buying in the pre-market. Now, how did we get, S1. How did we get R1, R2, R3? Let's walk through step by step. So the first resistance potentially is when you can look in the pre-market and it starts to trend lower, it starts to move sideways and there's a lot of volume being done in the 265 area. So my thought was on the open, the first potential spot, if people are going to aggressively sell this and it's going to fail and test the lower support, it's going to be right at 265. If it gets above that on the open, the next resistance, R2, I have as 67. Again, that's based on some pre-market trading action. And then finally, R3 was 270. And my thought was on the open, if it spiked up very quickly, and you can see this is the chart I actually used the morning meeting. You can see I kind of marked it up. If it spiked up very quickly on the open and into that 270, I would expect a failure initially, and then a test of R2 could act as support, or potentially R1 at 265. But the longer it spends above the first potential resistance, the more likely it is to test the third resistance, which it did later in the day. And so these are the levels that came into play. Now, notice it's possible on the open, it didn't have to go up initially, it could have gone down, and then the support levels would have been the S2 and S3 would have been the levels we were looking at for potentially a bounce as there as well. And if the first move is down to S2, then we'll look to see if S1, 260, will act as resistance. And so we're getting information, we're gathering information in the pre-market, and that's how we're developing these levels. But then when the volume, you can see the big volume spike right when the market opens, the first volume spike was to the upside. Now the burden becomes from an intraday basis on the sellers to show that it's going to fail and get back down below R1, which it never did. And that's pretty much it. But this is exactly the process that we use from the blog post, which is higher time frame, to find potential longer term support and resistance areas where people will be interested in buying or selling. If we get pre-market action where there's a lot of buying and selling, in this case there might have been, I think, over 1 million shares, we can then formulate levels for when the market opens, and then based on the price action against those levels, have an intraday bias. And in this case, since the first move was up and it held above R1 the rest of the morning and then started to hold above R2, and you can see R2 was important later in the morning, it started to hold above there, we start to think about, can it get to R3 and potentially fail at R3 and pull back. Hopefully this helped. And I wanted to also mention that this process of stock selection and game planning, click on the free 2-hour workshop, and and check that out. It's below the video, and it's also, you can click on the link above on the right side.